In the next few minutes, you will be able to learn the most important things about taxes in Germany every expat should know. Let's get started. By the way, if you're new to the channel, my name is Ahsan, and on this channel we discuss how to succeed financially in Germany. So when you look at your salary slip, there are so many deductions. These deductions essentially depend on two things: your tax class and your taxable income. Germany's tax system includes 6 tax classes that influence the amount of income tax withheld from your salary. Your tax class is dependent on your marital status and other personal factors. Tax class 1, single or separated individuals. Tax class 2, single parents. Tax class 3, married individuals if one spouse earns significantly more and the other opts for tax class 5. Tax class 4, married individuals with roughly equal earnings. Tax class 5, married individuals complementary to tax class 5. And tax class number 6, individuals with multiple jobs. As an expat, in almost all of the cases, you will first be assigned a tax class number 1 automatically. You would have to inform the tax office to assign you the proper tax class if you are married or have kids. Even when you register your marriage in Germany, they will automatically assign you and your partner tax class combination 44 even if your partner does not earn anything. Next, we have the taxable income. So Germany has a progressive tax system. For 2025, you pay 0% up to 12,084 euros. This is the tax-free limit, which increases each year. Between 14 to 24% for up to 17,430 euros, 24 to 42% for up to 68,430 euros, 42% for up to 277,825 euros, and 45% afterwards. The important thing to note is that you do not pay a single tax rate on your whole salary. For example, if you earn 68,430 euros, the average income tax on your whole salary would be 26.46% and not 42%. This is because you pay a different amount of tax on each segment of your salary. To pay 45% income tax on your whole salary, you would need to earn more than 800,000 euros. Below this amount, you actually never pay 45% on your whole salary. I'll put a link to the calculator where you can see how much income tax you pay in Germany. So if you're not paying 45% income tax, why is your net salary still so low? Well, this is where we need to talk about the second question: social contribution. Income tax and social contributions are two separate things. Social contributions in Germany include pension insurance 18.6% of gross income, health insurance 14.6% of gross income, plus an additional supplement rate averaging around 2.5%, unemployment insurance 2.4% of gross income, long-term care insurance 3.05% of your gross income, with childless employees over 23 paying an additional 0.25%, which comes out to be about 40% of your gross income. But thankfully, half of the burden of social contributions is divided by you and your employer. So essentially 20% of your gross income goes to these social contributions. But if you have a high income, social contributions are only applied up to a maximum income threshold known as Beitragsbemessungsgrenze, contributions assessment ceiling. Once your income exceeds this threshold, no additional contributions are deducted for the portion of your income above the limit. For health and long-term care insurance in 2025, the limit is 66,150 euros per year. In pension and unemployment insurance, the maximum contributions are cut up till 96,600 euros each year. That being said, these social contributions are mandatory, even if your income falls below the tax-free allowance. For example, international students earning below 11,784 euros are liable for income tax but must still pay health insurance premiums. And depending on your job contract, you will also pay the other social contributions as well. The only job contract which is exempt from social contributions and income tax is the mini job. I'll put a link to my detailed video on that in the description. Also, please hit the like button if you're getting value from this video and consider subscribing. Here I also want to discuss how tax classes affect income tax rates and social contributions in Germany. Tax classes determine only how much income tax is withheld from your paycheck each month. They do not impact on your final tax liability. Your final income tax liability is calculated based on progressive income tax rate applied to your total taxable income for that year. Let me explain with an example. John, who is single and is in tax class 1, earns 50,000 euros a year. Adam and Sarah are married, with Adam in tax class 3 earning 50,000 a year and Sarah in tax class number 5 with no income. John's withholding is calculated based on his salary alone and pays tax at the standard progressive rate, with no adjustments for marital status or dependents. Adam's tax class 3 allows for lower monthly withholding because it assumes that Sarah in tax class 5 has a significantly lower or no income. This creates a split income effect where the higher earner is taxed as though the couple's combined income is evenly distributed between them. Sarah in tax class 5 results in a high withholding even if she has no income. The combined income of the couple is treated as a single unit under income splitting. This means the total taxable income is divided equally between the partners for tax calculation, leading to a lower tax rate due to the progressive brackets. At the end, Adam and Sarah pay less taxes because the tax-free limit applies for each individual, meaning that John pays 0% tax on 12,084 euros, but Adam and Sarah as a couple pay 0% on 24,168 euros. Social contributions are independent of tax classes and calculated strictly on gross income. In our example, Adam and Sarah benefit from family insurance for Sarah because she has no income, but the actual amount deducted for social contributions is identical for gross income levels, regardless of tax classes. But there's a way to reduce your taxable income and in turn reduce your income tax. You can do that with the help of a tax return. Now, there are many misconceptions attached with the whole process of tax returns in Germany. Like once you file a tax return, you have to do that each year. Or if you submit a tax return, you come in the eyes of the tax office. Let me clear most of them. Simply filing a tax return does not make you obliged to file it each year. For some, filing a tax return is not mandatory. For others, it is. In most cases, you are not obliged to submit a tax return in Germany if you have tax class 1 or in case you are married and have a tax class 4. However, if you have received wage replacement benefits, then you would be obliged to submit a tax return. For all mandatory tax filers, the deadline is generally the 31st of July of the following year. However, this deadline is for self-declaration. If you file with the help of a tax consultant, you have about 8 to 10 additional months. These are the important deadlines. Things may change when you watch this video. That is why you can head over to the written article on my website to get the latest information on deadlines. So if you're not obliged to submit a tax return, then you have an option to file for up to 4 years in the past, meaning that in 2025, you can submit a tax return for 2024, 2023, 2022 and 2021. Here I have to emphasize that if you are obliged to file a tax declaration and somehow you do not submit it, then there will be a fine. The late fee is generally 0.25% of the assessed tax, but at least 25 euros each month that you are late. A maximum of 25,000 euros fine can be given if you do not submit a mandatory tax declaration, so please be careful. Now, most people have a completely incorrect idea of what a tax refund actually means. Let me explain how tax declarations work in Germany and what a tax refund actually is. If your income in Germany exceeds the basic tax-free allowance, Grundfreibetrag, you are required to pay income tax, Einkommensteuer. This applies to both student jobs and non-student jobs. You pay income tax on the portion of your salary that exceeds the tax-free threshold based on Germany's progressive tax system. Your taxes are calculated automatically before you receive your salary. This is where the opportunity to file a tax declaration comes in. In a tax declaration, you provide information about relevant expenses that can reduce your tax burden. These expenses can include work and study related costs like travel costs, relocation costs, education fees, and much more. I have created a free guide that discusses these in detail. You can download it using the link below the like button. So based on the information you provide in your tax declaration, the tax office determines whether you have already paid the correct amount of tax or if you have overpaid. On average, people who file a tax return get about 1,063 euros tax refund. But you can drastically increase this refund if you provide work or study related expenses in your tax declaration. If you are an employee, eligible expenses include anything related to your work. This could be commuting costs, traveling to and from your work, or items that you have purchased that help you perform your job. For example, a mobile phone that you use for work, a laptop, or other equipment like printers or papers, etc. There are many more possibilities depending on your situation. If you are a student, you can deduct expenses related to your studies. This includes education fees such as registration and tuition fees, as well as items that assist with your education. For example, a mobile phone, laptop, or other study-related expenses. As I mentioned earlier, if you're not obliged to file a tax return, the deadline doesn't apply to you. You can declare taxes in Germany for up to 4 years in the past. However, you cannot file a tax declaration for a period older than 4 years. Here you might say, Ahsan, I haven't paid much in taxes, so why should I file a tax return in Germany? My answer is tax loss carry forward. A tax loss carry forward is a certificate issued by the German tax office when your income was too low to pay income tax, but you still had eligible expenses. For example, if you earned only 5,000 euros in a year and didn't pay any income tax, but you had travel costs, bought work clothes or equipment, or incurred study-related expenses, you can file a tax return. The tax office will calculate your eligible expenses and issue a tax loss carry forward certificate. This certificate can be used in your next year's tax return to reduce your tax burden. If you don't pay taxes the following year, you can still declare those expenses for that year and combine them with the previous year's certificate. You can carry forward a tax loss certificate for up to 7 years. This is especially beneficial for students who may not have a taxable income right now but will later. It's an excellent way to lower your future tax liabilities. Now there are many options that you can use to file a tax return in Germany. In this video, I talk about the biggest tax deductible expense almost every expat has. And in this video, I share how I file my own taxes using a web app.